Look at this example here in page 250. Spring Sandram Berhad, 31st October year end, had a tax estimate of 180,000 for Y 2012. Now they believe that estimate for 2013 is 100,000. Now how much should the CP 204 estimate be, and when should it be submitted? How much? Now minimum must be 85% of your last estimate. So 180 was the estimate for 2012, which means minimum is 153. So you cannot use 100. You have to submit 153. Now when must you submit? 30 days before the beginning. So we're talking about YA 2013. So the beginning of Y 2013 is 1st of November 2010, 2012. So 30 days before, that means 31st October minus 30, that means you submit by 1st October 2012, right? Okay, now the next part they say, subsequently, on the 15th of the first month eligible for revision. Now you can revise in the 6th month, you can do it again in the 9th month. So now they say the first month, that means the 6th month, okay? Now they revise on the 15th. That means it's after or before the installment payment. After your installment due on the 10th. So they revise the estimate to 123,250. So now they ask you to prepare a schedule of the remaining installment. And which month should revision be made? Now, company is very different with the one we see for individual. Company, every time you revise, when you do a revision, you just take balance of the tax, which means the revised tax minus whatever tax paid, divide by the remaining installment. If you do a revision, just remember, spread back. Okay, take the balance of the tax, divide over the remaining installment. Okay, so initially the estimate was 153 divided by 12 months, which means is 12750 per installment. Now first installment in the 2nd month, i.e. which month is that? Year end is October, that means November and December, correct? No? December 2012. Okay. So you think and see the revision in the 6th month on the 15th. 6th month is which month? 10, 11, 1, 2, 3, 4, April, right? Now, that means you already paid how many installment? You start the 1st in December, you revise in April, but you do it on the 15th. That means April also you pay already. So how many installment have you paid? Huh? Start in December until April. December you pay until April. You already paid 5 installment, correct? Now you have 12 installment, right, in a year. You already pay 5 installment. That means you still have another 7. Okay, so what's your schedule of payment? Your monthly installment. Now I revise it to 123,250, and I'm paying 12,750 per annum, but that's the original amount, and I already pay 5 times. So the balance is what I need to pay. Understand? Huh? Okay. You already pay this amount. You revise it to this amount. So the balance is what you need to pay. I mean, if you say, what if I revise to an amount that is lower, then you don't need to pay it. That means you won't pay it. You see? No? So that's why you find that now you still have this as the balance. Now, how many more months you need to pay? 7. No? So that's why 123,250 minus, after this divide by 7, you still need to pay 8,500 per installment for which month? May 2013 until Five, 6, 7, 8, 9, 10, 11. November 2013. Now that's why it's all continuous. You start in December, December, then January, February, March, April. So 5 months. Then May continue until November. Okay. That's why next until December is next year. You pay another installment. That's why you start in December again. So that's how it works. Okay, so this is B. Now C. Which month should the revision be made? In the 6th month, i.e. in September 2012. Sorry. In April 2013. The 6th month is April. Alright? Okay, now D, they ask us. So on the 9th of June 2014, the company filed the C form, which indicates a liability of 175,000. Now, what implication do you have? Okay, there's a few things you watch out. Okay, number 1, the year end is 31st October. So the C form for Y13 is due by, give me the date please. May 2014. Why? How long you have as a due date? How many months? 7. Year end is October, so 7 months, right? So November, December, January, February, March, April, May. So until May. But they say June only they submit. Okay, no? No, right? So submission in June 14 means there's a late submission, which is an offense. If convicted and guilty of an offense, you can subject to fine between 200 to 2,000, maximum 6-month jail, or both. Now the first issue you got to see is this issue because the date is given, so you look at that. Now, but offense can be compounded. Okay, I'll come to this later. Okay, I'll tell you what is this later. Okay, number 2. Looks like the amount of tax you have 175. It's higher than the 123250. So I don't know whether you get a penalty or not for underestimation. That's why you work it out. Okay, we check. Would there be penalty for underestimation? Okay, so how do you find penalty for underestimation? Now, the tax payable is 175. The tax estimate under your installment is 123250. That's the last amount. Okay, if you minus this, there's a difference by 51,750. Now we give you a margin of safety 30% of 175, which is 52,005. So good lah. There's no excess. So there is no penalty for underestimation. Okay. You have to pay your tax balance, right? Now, by 31st May 2014 to settle the balance 151,750. Okay. Now, but the return form is only submitted in June. Chances is you will pay late also. Okay, so if you pay late, this amount will increase by 10%. If you pay any time between 1st of June to 30th July 2014. Now I don't know when you pay because the question never indicate. And if you pay after that, then we have another 5%. That means you will need to pay on or after 31st July 2014. Okay. Alright, now if you have done, then I would like to discuss a bit on page 249. Let's go back to page 249. Okay. Okay. there's two issues that we need to see here regarding tax installment. Now, number one, if a company never submit tax installment, the Director General has power to direct a company to pay installment. Okay, so you don't have to submit, then only you pay. The DG has the power to direct a company to make payment by installment at any amount that the DG finds reasonable. He can serve you a direction, and again, if you have served a direction, then you're allowed to make a revision of your tax estimate. Okay, no problem. Now, this is just a very small issue. Now, we're going to see another issue. Okay, if you fail to submit an estimate, okay, if there's a failure to submit estimate, on conviction, we have a standard penalty. Alright, we have a standard penalty. Now, the maximum fine of a standard penalty is only 2,000 ringgit. So if you fail to do something, usually they will not simply charge you in the court. They will allow you to compound the offense. That means you just pay an amount and case closed. And the amount to pay compound cannot exceed the maximum penalty in the law. So the maximum penalty is 2,000. That means your compound maximum is 2,000 also. So there are people that imagine they're very smart. They have a tax of 2 million. Okay, you just think and see. You have a tax of 2 million. If you submit estimate of 2 million, every month your installment is 100 over 1,000. Okay, I don't want to submit. I take the 2 million, I put in the bank. I take 3% interest. How much do I get? 60,000, is it? Now, I get interest 60k. I know I'm wrong. You charge me. Okay, I know I'm wrong. I tell you, yeah, I admit it's my mistake. So if you admit that this is your mistake, then the Inland Revenue will have to compound your offense. So maximum is 2,000. So imagine if you pay 2,000 ringgit and you don't have to pay installment. At the end, I still settle the tax. I settle at the end. I just don't pay installment. So I put all my money in the bank to get 60,000 interest. Now you think and see, 60,000 interest versus 2,000 compound. You don't need to be an ACCA to do the cost benefit analysis. So any joker also understand that might as well don't pay installment. So that's why this way will be a very simple way for us to do a tax planning by bypassing the problem in the law. You see, no? So that's why the government gets smarter. So they know that if we charge you like that, you find that it's better you don't submit. So that's why now they change the way how they can penalize you. Now, so there's this part of the law that they say, if in a year no estimate is being furnished, you fail, you fail, and they decided not to prosecute you. That means they don't want to charge you, okay? And you have a tax that is payable, okay? You have a tax that's payable, then the tax payable will increase by 10%. Easy, right? That means in this case, it's better for the government to ask you to pay extra 10% of the 2 million. So you will pay extra 200,000. So you think and see, why earn 60 and then end up pay 200,000? Because you know, last time this law is not there. You can do this. The most is 2,000. Is it not? But now cannot. Now, if let's say, for example, you got no tax one, you got no tax, but you fail to do it. The company tax is 0, but you fail to do it. Then they will not do this. Then they ask you to pay compound 2,000. Example. Is it not? So that's why now they have a freedom of choice that they will always do in a way that is better for the government. Okay. Now this is about when you fail to submit an estimate. Okay. All right. Now page 251. Okay, there's this thing called monthly tax deduction. Now we only need to know the concept, because in the exam you cannot be asked to work out the figure. You can't do MTD in the exam. You are not given the table. You cannot calculate. Okay. So basically, the employer is required by the law to make deduction from the employee's pay every month. Okay, every month you must make deduction, and the amount you deduct will follow a schedule that the government release, the Inland Revenue release. So there's some formulas you must use to calculate. So after you determine how much to deduct, then you will submit a statement of tax deduction, which what we call as CP39, together with the amount deducted. You send it to the government. Now the due date is by end of the following month. Now which means if you talk about deduction for, let's say, October 2013's pay is by 10th of November. Okay, salary for October, the taxes that you deducted, right, by the 10th of November you send it to the government. Okay, now but if you want to so-called determine the amount of deduction, then you also need to, in a way, estimate how much tax that they have to pay. That's why you have a schedule. Now the deduction is depending on various factors. For example, like what is the employee's income, because the more you get in your salary, the more tax you need to pay. Okay. Now your marital status, be you married, you can claim spouse relief if your spouse has no income. If you're married, you may have children. Children give you more relief, your tax is lower. So depending on the number of children, depending on your EPF contribution, because the more EPF you get, the more relief you get. Okay, so there's a lot of other things, like you get bonus or not, you get zakat or not. So there's a lot of formula that you will use to determine. Now once you determine, let's say the monthly amount is deduct 100 ringgit, then every amount that you have, you just take 100 ringgit out from the worker's salary, then you send to the government. That's all. Okay. Now there's issue about MTD. Now under the monthly tax deduction, if the employer fail to comply, okay, now fail to comply may include fail to remit by the 10th, that means you have a late remission, okay, or you fail to deduct, you never deduct, you pay 100% to the worker, you fail to submit the deduction, okay, you fail to give complete or accurate information, or you fail to pay compound in the event you have some late payment and stuff like that. Okay. Now, so when there's a failure to comply with all these things, it becomes an offense. Now, this offense is more serious. That on conviction, if you're guilty, the fine can be up to 1,000 ringgit, jail up to 6 months or both, and it's based on per offense. So one worker is one offense. So if 1 month you got 100 worker, 100 worker all got late submission, so it will be this times 100. Then if the following month you do again, then again we will times another 100. So imagine for the consecutive 6 months, all the 100 worker you also never do, then we can continue to add up. So it's very scary. Okay. So this is to do with STD. That's all. Okay. Look at page 252. Now, that's the issue to do with leaving Malaysia. You see, if you owe taxes to the government, and the government believe that you're going to leave the country without paying, they can blacklist you so that you can't leave the country. So that's why if a person is going to leave the country without settling the tax, the penalty, the withholding taxes, then the Inland Revenue may issue a certificate to indicate how much you owe the government, so that this person will be prevented from leaving the country. So you become blacklisted. So if you go and scan your passport, you cannot get through. You know? So then they'll stop you from leaving the country. Now, if you want to leave the country, there are two ways. Okay. So a person that you have been, you have a certificate issued, means you have been blacklisted. You may only leave the country on two conditions. One, you produce a statement signed on or after the date of the certificate. Now let's say, for example, the government blacklists you on the 19th of September 2013. Okay, you know already, before you leave the country, you check from the website, you see your name is blacklisted. So what you do is you go to Inland Revenue Office, you settle the tax. So let's say the statement is dated on the 24th of September 2013. Then when you go to immigration, if let's say the blacklist is still there, that they say they don't allow you to leave, then you show them, say I settled it, then they'll let you go. Okay, now this is what you must do. You show a statement that you settle the taxes, or you pay all the tax on the spot to whichever person in charge that they stop you from leaving the country. Now these are the two ways of how you can leave the country in the event if you have been blacklisted. Okay, right, turn to page 253. Now, what we have here is basically, they say in section 107, okay, in terms of employment, okay, mainly employment. Now, not only employment, but periodical payment, annuity, all these also included. So if there's an income for employment or all these periodical payment, and the Director General direct the person whom the income is payable shall make a deduction. That means the government want you to hold back the money, okay, before you pay. Alright? Now, not only that, if you fail to comply with section 83, 2, 3, 4 and 5, now 83, 2, 3, 4, 5 is all to do with employer's responsibility, to do with all this notification of commencement, cessation, leaving country, hold back your salary, all this kind of thing. Now, so basically under this law, that if the government wants you to do certain thing, okay, they want you to do certain thing that to do with, for example, employee's income, but the employer failed, then what happened? If there's a failure, example, the employer will be liable to such taxes of the employee. That's the idea, okay? Understand? Huh? So let's say, for example, the worker resigned and going to leave the country, and the worker owe the government taxes up to 8,000 ringgit. Now, by right, you need to inform the government that this person resigned, going to leave the country, and you're supposed to hold back the salary, but you never do all that. Okay? Then later the government found out that this guy left already, cabut, and cannot get back the money. Then the government will need the employer to pay back. Okay? This is your duty as an employer. Follow? Now, not only that, we also have problems with director's liability. Okay. Let's say ABC Sendirian Berhad. That's an employee, okay? Now, the employee left. ABC failed to comply. Okay? The employee left. ABC failed to comply. Now, let's say employee has outstanding tax of 5,000. Okay? The employee left. So what the government will do, the government will ask the employer is ABC, right? Fair enough? ABC employ the worker, right? So the employer will have to settle the 5,000 because of your failure to comply with certain provision of the law. Now, not only that, what if the company themselves, they fail to comply, or when the government asks them to pay tax, they got no money? So let's say ABC say, I got no money. Imagine you owe a lot of taxes. Then you don't have to pay, Then last minute, you tell the government, I got no money. You sue me. Because you sue me, then the company will be liquidated. Because I got no money. So to make sure that we can protect the government, in case if the company got no money, that now we sue you until you become being liquidated. Still not enough to pay, right? then we will sue the director personally. That means the director personal liability, okay, will be affected. Now this is where they say directors will be jointly and severally liable for the tax due and payable by the company and tax due and payable by the company in relation to employees' involvement. But not all directors, not all directors. We only refers to those cases that the directors will need to own more than 50% ordinary share. That means you are a director, that at the same time you are also a controlling shareholder. Okay, if you are not a director that can control that, it's okay, no problem. Follow. Right, so let's see issue about employers and directors' liability. Okay, turn to page 254. Now, see the government wants to show that they're very efficient now. So they tell you, you pay your tax late, we charge you interest. So if you return your money late also, we give you back interest. So now we will give a compensation for late refund. So it's not now, it's only beginning next year, okay, 2014. Alright? Now, so how will the refund compensation be given? Now, the compensation is only given if the refund is made after 90 days. Okay, after 90 days, if return furnished electronically, that means you use e-filing. 120 days. Okay, if you furnish in any other case, that means manual, i.e. manual. Now the interest is calculated based on 2%. Okay, the interest is based on 2% per annum. So you must start calculating after the 90 or the 120 day. Okay, let's say for example, e.g. Okay, let's say you submitted a return and you have a refund of maybe 500 ringgit. So very normal, few hundred ringgit the government owe you. Okay, I don't know how to calculate the date, so I just roughly give you a date. Now let's say this refund is government to refund by maybe, for instance, 18th of July 2014. Okay, so the government must refund you 18th of July 2014. So probably you submit somewhere mid of April online, you submit. So 90 days from the submission, they have to return you the money. So the government never return you on time. So they only refunded on the 25th of July 2014. So they're late. Okay, so of course you're very happy, right? Wow, now the government late, so you get interest. So how much interest? Okay, we are supposed to refund you 500 ringgit. Now how many days late? It's after the 90 or the 120, you know, not from the date of the return. So if I write 18th of July means 19, 20, 21, 22, 23, 24, 25, 7 days. Okay, we have 365 days in the year, so 2%, 500. Now the government will pay you back 20 cents. 20 cents, no, 20 cents. You think a lot, not little, a lot, you know. how easy can you get interest from the government? So you should be happy, right? Better than don't have. Miserable 20 cents. Okay. Now, so take bus, go all the way there and claim the money also. Finish already. Okay. You might as well ask the government keep the money. Follow? Now, so this is how the so-called interest calculation works. Alright, now that's it. Issue on the collection system. All done already. Now we're going to move on and look at the last area of tax admin, the penalty. Okay. Now you see, the first thing that we're going to explain to you is this thing called power to compound. Okay, power to compound. Now, every time when a person committed offense, you made an offense, the director may before conviction offer you to compound it. Compound means you admit you made a mistake and then you pay whatever amount that the Director General said. Now the amount you pay will never exceed the maximum fine in the event there's a conviction. Follow now? That's compound. Now all offense can be compounded except those offenses that they are not allowed to be compounded in the law. For example, some criminal offenses cannot be compounded. So if you can't compound, then you have no choice. For example, you drive your car, you speed. Okay, speeding, you can compound, no problem. So the most is maybe you pay 150, 300, then you don't need to go to the court. Alright? Now only when they send you that so-called summon, they say pay within this period, you don't have to pay. Then you go to the court. Yes, you know? Now, but there are certain things you can't. For example, you drive your car, you knock a person, so the person died. Then sorry. You cannot take a summon and say I pay 300 and case closed. You can't. You must go to the court. Okay. Now, so that's why in tax also the same. Some you can compound, some you can't. Okay. Now, if let's say you made an offense that it can be compounded, that means easy to solve. The Director General will send you a written order. Okay, he'll send you a written order that he requests such person to admit that you've made an offense. Because if you don't admit, we cannot say you're guilty. Because only the court can prove you're guilty. That's why the way now is you admit first, you're wrong. Okay, he will specify which offense you made, which section, how much he needs you to pay as a compound, and he will give you an offer period. So during that period, you agree, you accept, you pay, then case closed. Understand? Now this is called compound. It's that simple. Okay? Right, move on now. Okay, we're going to see a few more offenses that can be more serious. Okay, just now we mentioned return form or fail to give notice of chargeability. Now, you know the form I told you, once you get the form, you need to submit. If you fail to submit on conviction, 200, 2,000, 6 months jail or both. Okay? Now this is not a very serious penalty, right? 200, 2,000 is not very serious. So a lot of people, they normally find it's okay, I don't submit, then end of the day, this is what I get. Now that's why what they will do, now the Inland Revenue, the power given to them is this. If a person makes a default in furnishing a return, okay, you never submit the form, and that there is no prosecution, instead of charging you in the court, right, that you only pay 200 to 2,000 and ask you to pay a compound, they are not interested. Amount is very little. So what they can do is they can use power given under 1123 that they will not prosecute you because they know you have a tax to pay. So what they will do is they will ask you to pay a penalty equals to 3 times the tax. So if let's say your tax is supposed to be 5,000 ringgit, you don't submit a form, I charge you 200 ringgit compound, for example. What is 200? It's very little. So I can use the power here under 1123 that the 5,000 ringgit I times 3. So you pay 15,000. plus the 5,000 tax. Now this is what they can do. Follow up, okay? Now that's for people who fail to submit return, that they can also decide to ask you to pay 3 times the tax if there's no prosecution. Follow? Okay, next one. Now there's this offense called incorrect return. See, basically, what is an incorrect return is not you to say, okay? So what we do here is you have understated your tax. There's something you do. Now your tax is understated. Now remember the issue on the withholding tax that you never comply. So if you have a withholding tax, you never comply, you're not supposed to claim deduction, but you still go and claim. Now when you claim a deduction that you shouldn't claim, your tax become understated. So when you understate the tax, the government can say this is an incorrect return. Now if there's an incorrect return, if a person makes an incorrect return or gives an incorrect information, unless you can satisfy the court that the incorrect return or incorrect information was made under good faith, that you are able to justify that is really unintentional, then the court will release you without charging you because you are not guilty. You see, but you must be able to prove it, which is very, very difficult. Okay? So if you can't prove that because this is under good faith, upon conviction and being guilty, your fine can be between 1 to 10,000. Special penalty, double the tax. Okay? So that's why you think and see if you have understated your tax by 10,000 ringgit. Okay? You pay tax lower by 10,000. If they charge you under 113 in the court, the 10,000 is the tax. You gotta pay fine up to 10,000. So imagine maximum 10,000. Then you pay double, another 20,000. So 10,000 you never pay. Now you gotta pay 40,000. So this is going to be very scary. Okay? So there's the offense under incorrect return. Now again, the Inland Revenue may not do that. So instead, if there's no prosecution, they don't charge you in the court, they ask you to pay a penalty equal to the tax. That means 100% of the tax under charge when they don't prosecute. As I told you, if you don't comply with the withholding tax, then if they impose you penalty for incorrect return, maximum is 100%. But so far, the government say they will charge 45. Okay, so in the exam, that's why you say maximum 100%. Okay, there's this thing called willful evasion. Now, what's a willful evasion? Now, willful evasion falls into cases that you have intention to evade, assist another person to evade taxes. For example, you omit your income, give false statement, give false answer, maintain false books of account, falsify record, you use a fraud to cheat. Now these are those cases where there's cheating already. For example, you maintain 2 sets of receipt book. One is the real account one is the one that the receipt all understated. So you use the other one to submit the tax. This is an example of willful evasion. Now willful evasion is criminal offense already. Okay? Willful evasion is criminal offense. And this is something that you cannot be compounded. So if the Inland Revenue decided to charge you under 114, you cannot ask for a compound. You have to go to the court. Now if you go to the court, then the court will try your case. And if you have proven guilty, if you are guilty of this offense on conviction, your fine can be between 1,000 to 20. So it's higher already, right? This one is only until 10. Now it's until 20. Now you can get jail up to maximum 3 years or both. Now just now got no jail one. Incorrect return got no jail. This one got jail up to maximum 3 years. Plus you have to pay special penalty treble 3 times. So the same example just now, let's say it's a fraud. It's a fraud. You falsify record, they caught you. 10,000 ringgit is a tax. Now 10,000 go to the court. The court say you're guilty, slap you with a fine, 20,000. Okay? Then the court say jail 3 years, example, okay, jail 3 years. Then now they say that pay a special penalty 3 times. So 10,000 pay 30. Now 30 plus 20 plus 10 is 60 already. 60 plus 3 year jail. Now just because 10,000 tax you don't pay, you get what? 60,000 tax plus 3 year jail. Now that is cases to do with fraud. So this is more scary, okay? Now not only under the 114 is scary, 1141A can be equally scary. Now what is 1141A? Now the law say anyone who assists or advises when you prepare return, okay, you prepare a return, any return, that the return result in an understatement of liability of tax. Then unless he satisfied the court that it was given with reasonable care, unless, if not, you get a fine between 2 to 20, jail of maximum 3 years or both. Now there's 1141A. Now 1141A is for those who involve in assisting or advising. Now, if you look at your tax return form, those who do tax, you know, at the back there are 2 signatures. One signature is the person, the taxpayer. One more signature they say is the firm who prepares the tax return. Now, so they may think that that firm to prepare tax return, if you sign, you'll be liable to 1141A. Now, actually you sign or you don't sign, you can still be liable to 1141A because the law say who assists or advise. So let's say for example, this is a taxpayer, okay, the taxpayer prepare the return. Now the taxpayer say that you my tax a lot, don't know how to pay, okay, so chit chat with you. They're very smart. You say I teach you a few techniques, so you do all these things, then you don't pay tax. But all these techniques are not legal one, you see, not? So you go and pandai teach them, you put some IC lah, the name lah, then pay some salary lah, then you reduce the tax. Now you teach the taxpayer how to cheat, you see, not? So you gave an advice. So the government caught the taxpayer for doing this. Then after that, the taxpayer say that, oh, why I do this? Oh, because you taught him. I don't know one. The guy teach me, do this, do that, do this, do that. Now, then the government can use 1141A to charge you. But to charge you, the government will have to prove that, you have to prove that you're not guilty if you have given reasonable care. Now, what do you mean by reasonable care? Now, it's probably easier to understand reasonable care if you look at cases like maybe a firm and a taxpayer. Now, let's say, for example, the client call up the firm and say that, hey, I still got another 20,000 deduction. I wanted to claim, but I forgot. I didn't send you the receipt, I forgot. Okay. So over the phone, the guy say, hey, help me to claim the 20,000. Now it's over the phone. The guy tell you, help me to claim. Now what will you do? Now as a firm, being professional, you say, I cannot claim for you just over the phone, right? I need to see the evidence. At least you fax over to me the receipt. So I look at the receipt. Then after that, maybe I claim. Then you send me the original. So I look at it. Then I don't mind. You see, no? But imagine you never do anything and you just say, okay, I claim for you. Then you hang up. Now, then after you claim the deduction and you forgot about this thing, and one day the guy kena. So when the guy kena, he say, wow, this 20,000, why you go and claim? Then they go and ask you, because you signed the firm that prepared the return. He say, why you claim the 20? Where did you get the 20? Then he say, over the phone, he tell me. Now, over the phone, he tell me. That means, have you exercised reasonable care? No. Then you can be guilty. But if you have exercised reasonable care, for example, the guy go to the extent he created a fake one and he cheated you, then it's not my problem, right? That's his problem. He cheated me. I don't know whether this is fake or not fake. Right? So I thought I look at the receipt, I said, okay, the receipt is there, so I claim for you. So in that case, you're not guilty. This is 11418. Okay? Now 115 is for those cases that just now we say you have been blacklisted. Now once you have been blacklisted and you insist on leaving the country, then if you are found guilty on conviction, standard penalty will apply. Okay? Now this is obstruction of officer. Now what's obstruction of officer? Now basically if the Inland Revenue wants to do their duty, you stop them. Now example during tax audit. Now we'll see this later. Now if you have obstruction of officer, upon guilty of this offence on conviction, you can be liable to a fine between 1 to 10,000, maximum jail of 1 year or both. Now failure to keep record, I explained this before, so I don't explain again. Okay. Now then page 258, there's a list of other offences. Okay, so all these things are standard penalty. So you can just run through as a summary. Right, so these are all the issue that we have here regarding the 4 area of tax admin. Now what we're going to do here now is to discuss something extra. Now you see, now we operate self-assessment system. Okay? See, if you operate self-assessment system, don't you think it's a very easy, simple way for the taxpayer not to pay the tax? Because you determine your own tax. You just feel like, I don't want to pay so much, then I simply submit an amount and pay a very low amount. Okay? Now, see, if you do self-assessment, it's definitely easier for you to understate the tax. Unlike those days you still have to submit document. You want to claim relief, you got to send your receipt. They got to see, then they allow you to claim. It's not you say, then you claim. But now it's different. You say, you claim yourself. Okay, you know? So that's why we need to have a system to ensure that taxpayer complies with the provision of the law. So how do you know whether taxpayer complies with provision of the law? The Inland Revenue will conduct this thing called tax audit. So what's a tax audit? Now basically a tax audit is an examination of the taxpayer's record to ascertain if the taxpayer has complied with the tax law, the return is accurate. Okay, that's called tax audit. Okay, we just want to make sure that everything is correct, that you don't do it wrongly. Now, so the purpose of why we do audit is, of course, to detect non-compliant, because when the audit is being conducted, we be able to catch those taxpayers that if they understate the income, understate the taxes, but also at the same time is to deter non-compliant. Because if you know that one day your tax record will be audited, then you'll be scared. So once you're scared, then you don't do, because penalty is serious. You know? So that's why they believe audit is meant to detect and audit is meant to deter. Okay, so this is the purpose. All right. Now, so this audit is actually a routine exercise. Okay, it's a routine exercise. So you don't have to feel strange if one day they say that you have been selected for audit. It is not because they suspect you anything. It's just because it's something routine. By chance, the turn comes to you so that they want to audit you. That's all. Yes, enough? Okay, so we're going to see a bit about audit and how they do it. Now, there are two types of audit. One is called desk. So desk means the audit is done at the Inland Revenue Office. Okay, that's called a desk audit. So maybe they just run through your record, and there's anything that they're not happy or they have doubts, then they call you or they send you a letter or fax and say, I want to have all these things fax over to the office. That's all. Okay, so they may also ask you to go to the office, interview you, run through certain things. So it's quite simple. Okay, now this one will not involve a visit to the taxpayer. Now the other type of audit is what we call as the field audit, the major one, that they will visit to taxpayers' premise. Okay, so we're gonna see if there's a field audit and how will this be. Now first, you will be selected. Taxpayer is being selected for audit. Now there are many ways of how they select you as a target. So they may look at, for example, your gross profit margin. If the margin is a bit unusual, not consistent with industry, okay? It could be risk analysis. It could be because people go and complain about you, you know. So it could be random. There's many ways they say, okay. So they select you for audit purpose. Now once you've been selected, then they will inform you, okay. The Inland Revenue will inform the taxpayer that you've been selected for audit. Now they will tell you the date that they will come to visit you. They will tell you which YA that they audit you. So they can't audit you anything that is already time bound. Okay, so they can audit those things is still within the time period. So in that case, it's 5 years. The new law is 5 years. Now it's still 6 years. Okay. Now they will also tell you what document that they want, so that you get ready. Okay, you get ready. Now, so basically they will inform you. That's why audit is not something surprise one. It's something routine, something that they arrange and they become very systematic. They'll tell you we're coming, because you know. So if you find that this date is not suitable, you can call them and change date. You can delay. If for example you find that the date is too soon, you got no time, you delay. You want to make it earlier also can. It's up to you. Okay. Now you can always make arrangement to change. Follow? Now, so on that day itself, the Inland Revenue will come. So on the audit day. So when they come to you, they will need to identify themselves as the Inland Revenue Officer. The usual thing that they will do, that they will identify themselves. Okay. Then, of course, when they show you the ID card, you can always have your right that you don't believe them, you don't let them come in. You say, I want to check your ID. Then after that, you say, I still don't know whether you're the real person. Let me call the Inland Revenue Office. You can do that. In Malaysia now, you know it's not safe. Okay. A guy can just pretend I'm the Inland Revenue Officer, come in and rape you. Then okay. So that's why you can do all that. That's your right. Okay. You don't allow him to come in until you verify that he's a real person. But he will tell you that I'm coming for audit. Okay. Usually we will start with an interview to understand more about your business, your system, everything. So you start with interview. Then he will go through all the records that he wanted. Now, he will go through your documents. So in most cases, the audit is around 1 day in your site, but it may go longer, 2 days or 3 days. Okay, or sometimes you find that they cannot finish, they want to take back, then they will ask you for permission. Okay, now the issue we see here is during the audit, the taxpayer shall give reasonable facility as well as assistance. Okay, you must give reasonable facility as well as assistance. For example, I let them use your photostat machine. Okay, give them a place, proper one with aircon, with lights. You imagine you purposely make a fool out of them, give them a room, no lights, no aircon. You go there and do audit. Okay, or put 2 dogs inside the room and then scare them. Now, this is something, terrible. You're not supposed to do that. You're supposed to be very cooperative. So if you are not cooperative, remember just now the offense? The one that you fail to give reasonable assistance, we can also charge you for committing the offense. Okay, during the audit, the Inland Revenue Officer cannot, this is not allowed. Okay, they cannot search your premise. So they cannot go and then start searching around and ambush and take all the things. They can't search your premise. They can go to access anything that you give them permission. Okay, and they cannot take possession of your record. So if there's anything that they want, they will ask you that can they take it. You can always say cannot, then they cannot take it. It's your right, it's your right. So you say no, I don't allow you. Then they have to come back. So they have to come back. But if you say okay, you take, then they'll prepare a list to show you this is what we take, and then they'll give the list to you and say this is what we have taken from you. Now, so usually an audit, if they start, the period that they will take to dispose a case is about 3 months. Okay, 3 months is considered long. It could be shorter, faster. But if they need more than 3 months, they will tell you that longer period is required. Now, so at the end, when this audit is considered done, what they will do is they will discuss with you, with the taxpayer, and show you the audited result, a report. Okay, they'll tell you, for example, these expenses you cannot claim, we don't agree and stuff like that. Then he'll give you a report now, and he will tell you based on that you have an understatement of tax of how much and stuff like that. Now, once you see that, you normally have 14 days to resolve the issue with Inland Revenue. Okay, you have 14 days. Now, after 14 days, the Inland Revenue will issue assessment. That means they will tell you that this is whatever tax you need to pay. Then the assessment is usually composite. That means they plus together with penalty. Okay, now how much penalty that you need to pay? Now usually they will charge you under 114, 113 incorrect return. That means maximum 100% of the tax. Okay, so after audit, if they realize that your tax been understated by 5,000 ringgit, then they ask you to pay 10,000 or something like that. Okay, but of course you can negotiate because the Inland Revenue has power to remit your penalty one. So you can negotiate and say, help me this and that. They say, okay you just pay the tax only. You don't pay the penalty. Okay, also can. They have this kind of power. Okay, now, so this is what happened at the end of the audit. Now, of course, you realize that, wow, like that is very scary. So what if now, after you know all these things and you regretted, so you wanted to save yourself from this position in the future? Now, this is what happened. The government come up with a system for those who regret and wanted to make a U-turn. Okay? Now, first, you can use amended return. Okay, you can use amended return. Now, amended return, remember, we talk about this when we talk about assessment. Now, this is only for those cases that is still very early. Okay, for example, like you just submitted a tax return a few months ago. So after you listen to me, you realize you regret. So now it's still very early. You use amended return. Because amended return give you up to 6 months. Now, but after 6 months, you can't use amended return already. So if after 6 months you can't use amended return, this is only up to 6 months. Okay, then you have to use the other way. voluntary disclosure before being selected. That means before they pick you up, you go and surrender. You tell them, oh, I do this. Okay? So now you tell them that I'm wrong, I want to admit. Now, to do a voluntary disclosure before you being selected, anything more than 6 months up to 1 year, right? Because within 6 months, you can use amended return. So more than 6 months up to 1 year, they will add 20% as penalty. Still lesser than 100, huh? Correct enough? Okay? Now, more than 1 year up to 3 years is 25. More than 3 years is 30. But if you have been selected before the audit commences, that means they send you the letter lah. Then after that you call them, okay, don't do your work lah. I make your life easy. I admit. Okay, this is where the part that I'm wrong. You tell them. Then they say, okay, since you make our life easy, then we will add 35% instead of adding 100. Okay. Now they don't add 100 immediately. Usually they will start with 45% because there's a concession rate. Then if they catch you again, 45 become 55. 55 becomes 65, 75, 85, 95, 100. You see, so that's how they impose this thing on tax audit. Okay. Now before that, now besides this thing called audit, there's also another issue called tax investigation. Now very small area. See, investigation got two types. One is civil tax investigation. Another one is criminal tax investigation. That means the charging section they use is 113 or 114. Now what's the main difference between these two? Okay, now the only difference is this one don't need to go jail. This one must go, I can go jail. Okay, 113 don't need to go jail. 114 must go jail. Okay, 113 can still compound. 114 cannot. You must go to the court. Okay. Now why will there be an investigation? Investigation is not something routine. If you get investigation, means you have a big problem with it. You see, so for example, maybe they suspected a tax evasion. Maybe someone complained. Someone gave information, evidence to the Inland Revenue. So if they come for a tax investigation, number one, it will always be surprise. They will not inform you that I'm coming. They will probably send people to sit down in your restaurant and look at how many chicken you sell in a day, then they take record. After that, they will send people in, then they will ambush. They will search your premise, plus they will take away your tax record. I mean your accounting record. Then they'll take away all these things, and then you will go them and see them, negotiate and stuff like that. And depending on what kind of so-called investigation section they charge. If it's under civil, not so hostile, you can go there, they can still allow you to take note. If it's a criminal tax investigation, during the interview, you cannot take note one. You just got to be there and listen and then and look at the evidence, because later it becomes a court case. Okay, so whatever you say, they will record down. And then you go to the court, you say a different thing, your problem. That means you have inconsistency. Then you're going to lose the case even likely. Follow? Now that's issue about investigation. Okay, right. So that's it on audit investigation. Right. The next thing is I think you all know that my father just left me, so I'm very sorry that I've made a lot of changes to the class. Okay, so we will have a class tomorrow. All right. The afternoon is the tutorial. Okay, the night is the normal class. So if you can't make it for afternoon tutorial because it's too rush for you to apply leave, you just look at the video. I'll upload the video. Okay, so tomorrow we will start RPGT. Then nothing goes wrong, by the next Thursday we will finish off the syllabus. Okay, then Friday we start revision. Then probably I extend the time for revision because I still have some hours need to replace with you. Okay, right. Thank you very much. See you again tomorrow.